Um, I did see. I will give you a little credit where the credit's due. You always have to do that, no matter what. The company has gotten a lot more efficient. I was trying to look at revenue per store and revenue per employee, and on those types of efficiency metrics, the company's gotten much more efficient. I still think that no matter what, you sort of have this. You're brushing up against this problem of being in kind of this lousy business. Um, it doesn't mean that they can't make it work, but why bother paying for that when you can pay for something a little more dynamic and exciting? And I like boring stocks, but this isn't a boring stock at a good price. It's kind of like I struggle to see how they can make it worth 10 billion, with process improvement, organizational improvement, efficiency improvements, things like that, just on its own, let alone kind of exceeding that such that you'd be this excited about a stock, right? I mean, if you are that excited about a stock, and sometimes I've gotten excited about stocks in my career, you think it might be worth 20 billion or 30 billion, right? Because if it's at 10 billion now, you wouldn't sit there and say, "Oh, I'm thrilled it's worth 10 billion." You would sell it and find another stock. So you must think it's worth 20 or 30 or 40 billion. Well, I see 2 billion on the balance sheet. That's it. I don't see the retail business as being worth a lot. It's kind of hard to fathom that. And in this world, we do not give credit for things that haven't been done yet. We might get a little bit of credit, but when I put $1 million in Founders Fund, they don't tell me, Martin, it's worth 10 million. They go and invest, they try hard, they work, and then they send me an update every year and they say, well, I think our portfolio is worth 1.5 million now. And I say, great. And they say it might be worth 2, or it might be worth 3 if I'm really lucky. And that's how investing works. You don't automatically say, well, I just gave you the million and I think you're a good investor, Peter Thiel, who is maybe one of the best ever. So automatically, and he says, well, thank you very much. I am a great investor. I think the million you just gave me is worth 5. It doesn't work that way. We don't revalue investments just because the person's a good investor. In this case, Ryan Cohen is probably a very good manager. And we love to invest with good managers, right? That's the whole point of capitalism. And one of the things I will say, and again, I'm giving the credit where the credit's due, and I'm going to say some things I normally don't say because I'm an esteemed guest. One of the problems with value investors, and I have another esteemed guest here, Mike Howe. And I see Pulte just left. one, one of the one of the things value investors don't talk about that's not um, that we tend to forget is that when you forecast or try to value a company, the company isn't sort of this monolithic thing that isn't living, moving, breathing organism. It is. It's changing every day, and the changes typically come from management. Management has to do.
So Martin, what you're saying
You know,
is
you don't interrupt me. You don't do that ever again, ever. I'm on a nice little roll here, and he screwed up my juju. So anyway, management is very important, and it's hard for a value investor to kick the tires, scrutinize everything he can or she can, and determine the value of the company in a vacuum. Because if you did that with Tesla or Nvidia or any other great company, Microsoft or others, you'd have a really hard time as a value investor, a deep value investor, because you don't know what management's going to bring to the table. You don't know what rabbit they're going to pull out of the hat. You don't know what investments they're going to make that could potentially change the business, right? How do you forecast those things? You can't. Now, I've developed some ways to try, but it's pretty hard to sort of determine where and when management what they're going to be doing so that you can navigate accordingly. Now, on the flip side, we can see what GameStop's doing. Nothing. Nothing. What are they doing? They created an NFT marketplace. Wow, what foresight. What genius. This is the guy, right? Ryan Cohen, he's the guy. He's the guy we're all excited about, right? He's the guy that's going to save your ass because you bought a stock. There's $2 billion in cash. It's trading for $10 billion. You're long, so you think it's worth 20 or 30 billion. Some of you idiots think it's worth 100 billion. Okay. Well, what do they have that's worth any of that? An NFT marketplace? Guess what? OpenSea is basically worth zero. Okay? Nothing. And, I mean, you guys gave up on the NFT marketplace. So I give a little credit for that, too. Might as well cut and run, realize how dumb this was, shut it down, never speak of it again. Sure. But what's next? What's next for GameStop? How are we going to bridge the gap between 2 billion and 10 billion? This moron right here on my YouTube says it's called mergers and acquisition. Ever heard? Yes, as a matter of fact, I have 25 years of buying companies in pharmaceuticals. And again, nobody gives you credit for something you haven't done yet. You actually have to do the merger. And people actually have to get excited about it. Because most of the time, if you have a big pile of capital, guess what? Everyone else has got a big pile of capital. And everyone else is trying to multiply their money with more money. You're looking for the same bargains. Everyone's showing up at the same auction. I'm in the process of buying a company. Yeah, I've heard of mergers and acquisitions. I'm in the process of putting down 9 figures to buy a company. And guess what? There's a bunch of other people looking to buy it too because they sense the same bargain that I do. And guess what happens because of that? The price gets more fair. I thought I was getting a bargain. This other guy, smart guy, shows up. He's willing to pay more than me. Crap. Now it's not such a bargain. I might have to not do this deal. That's how M&A works. You're not going to turn 2 billion into 10 billion risklessly. You may be able to do it. People have done it. People have done better than that. But based on what we know about Ryan Cohen, the last time he tried to make some money, he tried an NFT marketplace. And I see a bunch of disclosures in the 10Q and 10K about writing down loss from digital assets, write-offs, etc. Not the stuff legends are made of. You know? I hope you find those M&A targets, because guess what? You can call Jefferies. You can call Barclays. You can call Deutsche Bank. That's what an investment banker's job is. You call them up, 1-800-JEFFERIES. They'll find a way to spend that $2 billion real quick. They'll get a 5% fee. So, Mr. Cohen, I got the perfect company for you. Here it is. And they're getting pitched every day, every minute from VCs, private equity, you name it. And one day he's going to put that $2 billion to work. But maybe he'll fuck it up like he fucked up the NFT thing. Or maybe he's the brilliant M&A guy who's going to find that company that's worth $10 billion for $2 billion. Now let's say he does that. What do you have now? Well, the $2 billion cash is gone. And he found the $10 billion company, so he made a hero's trade. And guess what you're left with? A $10 billion company, which is what the price is right now. That's what you're hoping he breaks even with a genius trade. Oh, no, you're hoping he turns $2 billion to $20 billion. Well, that's even easier than 2 to 10. Come on. I wasn't born yesterday. Neither were you. Stop being stupid. Who wants to ask a question? This is ticking me off.